This is your LMAX exchange technical update for Tuesday, September 26, 2017. Euro dollar. So it's all about the 50-day moving average for the euro on Tuesday and whether the market closes above or below. A close below the 50-day moving average would open the door for deeper setbacks towards initial support at 116.63 and then down towards the 115.50 area, which is a measured move downside extension following this latest 270-point consolidation that we've seen between 118.24 and 120.93, that 2017 and plus 2.5-year high. And so let's see how the market closes on Tuesday. A close above 1824 will keep the immediate pressure on the top side and this uptrend in 2017 well intact, with a prospect for another bounce and continuation of gains beyond 2093. Sterling dollar. Cable has finally seen a bit of a pullback off the 2017 high up towards 137, and there is risk for additional downside in this market before the market looks for a higher low. Overall, the structure is now constructive and the market should be looking for a higher low ahead of a resumption of gains back above the recent highs that we're seeing all the way up around 136.60 and towards that next major psychological barrier at 140 further up. So setbacks possibly over the coming sessions, but look for those setbacks to be well supported on dips. Dollar yen. So dollar yen is seeing some rallies stall out above 112, and there is risk that the market pulls back again for a retest eventually back towards that 2017 low. However, it would take a close back below 111 to put that back in play, while inability to establish a close below 111 will keep the pressure for now on the top side, opening a potential resumption of gains all the way back up towards the range highs this year in the 114 area. Euro Swiss. So Euro Swiss is seeing some gains extend up towards and above 116 to fresh 2017 highs, but the market isn't ready just yet to explode to the top side, and we are seeing a bit of a pullback. Ultimately, though, the structure is constructive. Any setback should be very well supported ahead of 112 in favor of a continuation of gains beyond 116.24 and towards that major psychological barrier at 120 further up. Aussie dollar. So Aussie is showing signs of stalling out after the market pushed up to another 2017 plus 2-year high above 81, but the market will need to break back down below 78.08, some support going back to the 15th of August to confirm the market is topping out and open the door for some downside. Until then, this market is just trading within a choppy consolidation. Dollar CAD. So dollar CAD is showing signs of putting in a bottom after the market had traded down to a plus 2-year low at 120.62. At this point, though, the market would need to establish a break and close back above 124.15 to open the door for an acceleration of gains and a continuation of this correction. Until then, the pressure remains firmly on the downside. Kiwi dollar. The New Zealand dollar has been chopping around quite a bit, but overall the market looks kind of toppy since trading up to a 2017 and plus 2-year high above 75 several days back. Look for the market to roll over with a breakdown below 71.32, that key low that was seen back on the 31st of August, to confirm the bearishness and open the door for an acceleration of declines all the way back towards the 2017 low in the 68s. SPX 500. The S&P 500 is trading just off a fresh record high, and until this market sees a meaningful pullback below support, which now comes in at 24.46 about, there is no point in having any conversation about this uptrend being negated by any stretch. At this point, though, the market is looking for a higher low as it continues to be very well supported on dips in favor of gains to fresh record highs. Again, while there is scope for a major reversal here, the market has continued to be very well supported on dips, and initially it would take a break back below the 24.46 area to suggest the market is rolling over, while ultimately a breakdown below the 2400 to 24.17 area would be required for a confirmation of a bearish shift. Gold. So gold has been very well supported on dips over the past several months, with the market recently pushing up to a 2017 high in the 1350s. At this point, we did see some setbacks, but those setbacks should be well supported in favor of a higher low and continuation of gains for a retest and break of that 2016 high at 1375 further up. Only back below the 1260 area would compromise the current constructive outlook, though a break back down below 1200 would be required to negate the more bullish structure for this market at this point.